Hey everyone, and welcome to This Explainer. I am so incredibly thrilled you're here today because we're tackling a topic that literally everyone dreams about. But honestly, very few people actually know how to pull off. I mean, if you spend even 5 minutes scrolling on social media, passive income looks like absolute magic, right? You just push a button on a beach somewhere and watch the money roll in. No way. Today, we are going to demystify how everyday people are actually building lasting wealth in the real world. Because with rising inflation and the economy just feeling so uncertain lately, relying on one single paycheck is getting a lot riskier. So we're doing a total reality check on passive income, and we're going to anchor it all around this fantastic real-world case study, David's dividend story. Okay, let's just dive right in and address the huge elephant in the room. Can you really make money while you sleep? Or while you're traveling, or just hanging out with your family? Because that is the ultimate promise of passive income, right? It sounds almost too good to be true. And for a lot of folks, the phrase just instantly brings up images of those super flashy internet get-rich-quick schemes. But I'm here to tell you, based on all of our source material, legitimate passive income is very, very real. It just requires smart financial planning and, well, consistent effort. We really need to dispel this myth of overnight, effortless wealth right out of the gate today.
So to understand how real wealth is actually built, let's look at this core distinction. Active income is what most of us are totally used to. You go to work, you exchange your time, your energy, your physical presence for a paycheck. And the second you stop working, the income stops, right? But passive income is a whole different ballgame. It's money earned from investments or activities that require minimal ongoing, day-to-day involvement after the initial setup. And this is a massive, absolutely crucial but, the reality is that building that stream requires a ton of time, money, or skills up front before it ever starts spitting out steady returns.
And that brings us to the crucial reality check. Passive does not mean effortless. Actually, some of the most successful passive income earners out there spent literally years building up their systems before they saw a single dime of significant return. Building a reliable stream of income takes immense patience, strict discipline, and a really long-term mindset. It is all about front-loading the work. But once that foundation is solidly in place, then the income sources can just keep producing earnings in the background.
All right, moving on to Section 1. Meet David, dividend investor.
Let me introduce you to David. He's a 40-year-old accountant living in North Carolina. He is a totally relatable, everyday professional who is just balancing a standard full-time job. You know, he didn't inherit a massive fortune, and he definitely didn't invent a billion-dollar tech startup in his garage. He is just a regular guy with a spreadsheet and a solid plan. And what's really important here is that he actively avoided chasing those crazy, highly speculative investments. Instead, David chose a really grounded, disciplined strategy to build real wealth over time. And that entire strategy started with this exact number, $500. David's baseline approach was wonderfully simple, but it required strict consistency. He took $500 and invested it every single month into a diversified portfolio of dividend-paying ETFs, which are basically just baskets of stocks that trade on an exchange. Month after month, totally ignoring whatever the news cycle was screaming about, David just kept deploying that $500. And this brilliantly illustrates the payoff. After several years of this incredibly disciplined, routine investing, David's portfolio now generates about $6,000 a year in passive dividend income. Just think about the emotional and financial relief of that for a second. That's $6,000 a year flowing straight into his account entirely in the background of his busy life, whether he's logging into a meeting at work or chilling on vacation. David still works full-time, but this extra cash just continues to increase every single year, pushing him closer and closer to true financial independence. So that brings us to Section 2, how dividend investing works.
Okay, here's the core definition. Dividend investing is simply earning a portion of a company's profits that they share directly with their shareholders through regular payments, usually on a quarterly basis. When you buy shares in well-established, financially stable companies, or funds that hold a bunch of these companies, you literally become a part owner. And that's exactly what David did. Because these companies have strong cash flow, they reward their owners. So you actually get two potential benefits here. You get that quarterly cash income, and you still benefit from the potential long-term price appreciation of the stock itself.
Now, why is this strategy so brilliant for someone who's super busy? Well, first off, it generates recurring income, which we obviously love. You get that potential for long-term capital appreciation. It's totally fantastic for retirement planning. But for someone like David, who is juggling a busy career, that last point on the list is the real game changer. It requires minimal ongoing management. Once you set up those automated purchases, the whole system essentially just runs itself.
But hey, we've got to keep it real and maintain an objective stance here. Any legitimate investment strategy has risks, and you need to go into this with your eyes wide open. First up, dividend payments are not strictly guaranteed. If a company hits a rough patch, they absolutely can cut that payment. Second, stock prices will fluctuate. Period. Market downturns are a totally normal part of the economic cycle, and they might temporarily reduce your portfolio's overall value. This is exactly why having a long-term perspective is absolutely non-negotiable.
Let's jump to Section 3, the power of compounding.
You guys, this is the secret sauce right here, compounding. Reinvesting your dividends allows your investments to grow exponentially faster over time. See, here's what David did right. He didn't take that $6,000 in dividends and blow it on a massive new TV or a fancy vacation. No, he automatically reinvested those dividends straight back into the market to buy even more shares. And then, those new shares produced their own dividends, which bought even more shares, and the cycle continues. It's like a giant snowball rolling down a hill. This compound growth is literally how you build a lasting, powerful financial machine.
All right, on to Section 4, avoiding common financial mistakes.
You know, so many folks just get totally discouraged because they expect overnight success. They chase these wildly unrealistic get-rich-quick schemes without doing any proper research. Another huge trap is depending on only one single income source, and as we talked about earlier, that leaves you incredibly vulnerable if the economy shifts. And finally, failing to reinvest your profits just stops that compounding engine dead in its tracks. By actively dodging these traps, David turned what could have been a stressful, risky sprint into a highly manageable, long-term routine.
Which leads us to Section 5, building your wealth foundation.
Now, while David focused heavily on dividends, true financial resilience actually comes from combining multiple reliable strategies based on your own skills and resources. Let's look at a few other options. High-yield savings accounts offer a very low-risk way to earn totally predictable interest, which is just perfect for parking your emergency fund. Rental real estate offers fantastic monthly cash flow and property appreciation, though, it does require high upfront capital and definitely some effort to manage. And then there's selling digital products, like budget templates or ebooks. That takes medium effort upfront to create, but once you make it, it's highly scalable with practically unlimited sales potential. Pairing a couple of these together, that creates an incredibly resilient financial foundation.
So how do we actually pull this off? How do we translate everything we've learned from David's success into actionable reality for us? Let's break it down into 5 critical steps you can take away today. Number 1, start small. You don't need thousands of dollars, just start with whatever you have. Number 2, reinvest those earnings to leverage that compound growth snowball. Number 3, stay diversified to reduce your overall risk. Number 4, keep learning, markets change all the time, and continuous education is your absolute best defense against costly mistakes. And finally, number 5, be patient. Real, sustainable, passive income takes time to reach its full potential.
So, I want to leave you with this. What is your first passive income stream going to be? Are you going to funnel a few bucks into dividend ETFs every month like David? Will you finally move that emergency fund over into a high-yield savings account? Or maybe you're going to sit down and start designing that digital product you've been putting off. Financial freedom isn't built overnight, but it absolutely is the result of taking consistent action. The sooner you set up that foundation, the sooner it can start working for you. Thank you so much for joining me in this explainer. Now take that very first step and go build your wealth.